Welcome to the Traders Clinic, your regular shot in the arm of regular trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each episode, we cover all things from the world of trading and answer your burning trading questions.
We do indeed.
Nice to see you, mate. You well?
Yeah, very well. And yourself?
Yeah, good, thank you.
Yes.
Let's get back into it.
Indeed.
So, got a bit of a quick fire one here. We're going to go through and come up with the 10 reasons traders fail. So over to you first.
Okay.
First one.
Yeah. Before we go into this, if anyone's wants to comment on the YouTube channel or whatever on this, by all means do so, because this is by no means going to be an exhausted list.
Exactly.
We're just going to do a few here. So I'll kick things off. Let's go with risk management. Risking too much per trade, over leveraged, over whatever, just risking way too much. I think one of the biggest reasons that traders fail is, yes, they just take on too much risk, and when they lose massively. And so if you reduce the amount of risk per trade to a very small amount, you're putting yourself in the right position.
Exactly. Staying on the risk theme, I would say not using stops. It's something that, you'd think by now, the amount of traders that we've interacted with, it would just be a given that you would use stops in the retail space, but so many traders don't. And I think it's that need to be right. It's that want and desire for the trade to go their way. And we know that it always ends in tears. And it's just something that is still happening now and has happened over all the years that I've been a trader and you've been a trader and we've been working with other traders. It's something that people just can't seem to get past, or a percentage of people can't seem to get past.
Yeah, I think if the only way that it would change, I think it's something like 80%, depending on the broker, 70, 80% of their clients don't use stops. It's a massive number. So, unless regulators enforced the brokers and then people had to put stops in, then I don't suppose that will change.
No, I don't think so.
Yeah. Staying on the stops theme then, another one is moving the stops too soon to break even. And people will say, well, yeah, but if I move my stops, then how can I lose? Well, this is 10 reasons why traders fail. And a lot of traders, not all, but unless it's tested, unless you know at the point that you're moving your stop that it's okay to move that, a lot of people move their stops to break even based on emotions, and the point here is moving them too soon. So there's nothing wrong with moving the stops to break even, but are you doing it as soon as prices moved up a blip, you're moving your stop to break even, and then you're just getting stopped out. So yes, you've lost nothing, but then you've missed out on what could have otherwise been a winning trade, and you need those winning trades to pay for the losers. So moving stops to break even too soon can actually overall result in traders failing.
Exactly. And I think it's the classic scenario where a lot of traders are moving their stop for an emotional reason. And then when they talk about it, they justify it with logic, saying, well, I can't have it. I'm not going to have a losing trade. But actually all they're looking for is seeking that feeling of relief that they know they can't lose on that trade. But actually, like you said, long term, they could be missing out on huge gains.
Yep.
Moving away from, so that's good. That's 3 on risk. I think if we look at strategy, the simple one is not having a clearly defined strategy. Now, it doesn't have to necessarily be something that's purely mechanical, where there's no discretion involved. But too many traders are, trading without a strategy. So then they're at the whim of what they see on the screen, what they hear on the news. Or a classic one that I see is that the trader doesn't have a clear strategy with an edge, but they're using some form of analysis. So on one day they're using Fibonacci's to justify taking a trade. The next day they're using moving averages. One day they're trading breakouts, then they're trading pullbacks. They haven't actually got a set of criteria that essentially creates a framework for them.
Yeah, you need to have a plan. Yeah, exactly. Where do I go? Okay, I'm going to stay. Well, I'm not going to stay anywhere. What about banking profits too soon? So again, that comes part of a plan.
Yeah,
banking your profits too early. So often you'll have a trader who will have a plan, even if it's a mechanical plan. They still bank their profits too soon. They still jump out. They don't follow their plan because they might have just had a couple of losing trades. Then they take this trade. It moves into profit and it's running quite nicely. And then that little devil on the shoulder is saying, go on, bank the profit, bank it. And they can't help themselves. And in a moment, their index finger has clicked on the mouse and they've banked the profit. And then, yes, it's nice that they've banked a profit, but it's a smaller profit than they otherwise should have done. And it comes back to the whole, well, you need those full profit trades to pay for the losing trades as well. And so it's very common practice, people struggling to stick to their plan in many, many ways. And one of them is banking profits too soon, coming out ahead of what the trade plan was.
Love that. I'm going to stay on that theme with the trade plan, and that's widening stops. So being in a trade and seeing the trade coming towards your stop and moving the stop, so widening it. Again, want that need, that want and desire to be right. So in that scenario, the trader could have had a plan. They could have had a very clear entry, stop and target, but the trade's going against them. It could be that they've had 2 or 3 trades go against them that day or that week, and their want and desire to be right overrides the plan, and then they start edging their stop a little bit lower, widening it, and then what they end up with is that loss being bigger than it should be. So not only in reference to what you're saying, that they're taking profits too soon, they're also, when they are losing, having too bigger of a loser relative to those winning trades, and that's vicious circle, or vicious cycle, I should say, can easily continue.
Yeah. Martingaling. So just say that, martingale, adding to losers. So as you've just said, so again, it sort of comes back to the not using stops because that's what tends to happen. Or like you said, they widen their stops and then say, oh, well, I'll average in. So that when it comes back up, it hasn't got to go up as much in order for me to be back into profit sort of thing. And that's fine. And a lot of retail traders do this sort of thing because we get the numbers from the brokers that's what they tend to do. We can see the average positions when a market's in a trend like this, and the average trader is 200-300 pips in underwater. It's because they're holding on to those no stop losses and averaging in along the way. So martingaling, please don't do it because it's I think the draw for martingale. So pound cost averaging, dollar cost averaging in. Is that, but when it comes back up, it will, but it's that one time that it doesn't come back up that it blows your account. And so the draw is that frequently you'll get away with it. You'll go underwater, add some more, and it'll come back up. Again, it's trading without a plan. If there's no plan with that, then that they might get back to break even and say, phew, got away with that one, or make a little bit of a profit, move on to the next trade. And then it's just a countdown to the point whereby it doesn't come back and it keeps going lower and lower and lower, and they blow up.
Yeah, so we've always said it's the black swan event that happens all too often. People think, and this leads on to my next one. I think where traders essentially fail is more that they haven't got a long-term perspective. So very often the trade that they're in is influencing the next trade, or the trade that they're in is defining how they feel about their whole trading career. So if they're on a losing run, they're like, oh, this doesn't work for me, this isn't working for me, and I'll get frustrated and I'll do something different, or I'll try something different. So I think one of the reasons I see traders give up is because they're seeing their current scenario as absolute. And if they took a bigger view and said, okay, this part of my trading is working, this part of my trading isn't, rather than that the whole thing isn't working, we're able to stand back and review what they're doing, take a longer term view, and improve over time, rather than thinking that they have to be making money that week to define them as a successful trader.
Talking about using information, might as well stay on that theme now. We're bouncing around all over the place here.
It's good.
But be careful of thinking that backtesting results are the holy grail. And so again, a lot of reason traders fail is they do some backtesting. They say, oh, I've got this amazing system here, which they've backtested over whatever period of time. And the backtest is great, but then they start trading it in real time and it all just fails. This is a big subject by itself. It's difficult to know whether your backtest is going to work in the future, but there are certain things that you may have done in your backtesting which has, you've curve fitted it to the historical data. You've put too many things in, which makes it very tight, very fragile. Only one of those things has got to change and your whole system has failed. So be very careful. backtesting is great, as we know, for giving us as a framework, but it's not a guarantee of exactly that's going to happen in the future. And a lot of people think, and I know in a previous episode I was telling that story about that trader who thought they had a great strategy based on backtesting and then went and traded it and lost 26% in a month or whatever it was. So
I think that's a good one for it. We can delve into that one in another episode. I think that's great. I'm going to flip it the other way and going from having no strategy or plan to doing the opposite, which is flipping their strategy or plan when it doesn't work. So changing their approach too often. I see that with traders. So again, it links into the fact that they're thinking too short term. So something doesn't work for a month, they suddenly shift to another one and they strategy hop. So I think that's a big issue with traders, especially with the amount of accessible information. I don't speak to traders anymore that are suffering from a lack of information. All traders at the moment seem to be overwhelmed with information. So I think strategy hopping is something that a lot of traders need to be aware of, and they need to give something more time to refine it and see if it works.
Yeah. I'm going to say 2 words: anger management. So what I mean by that, I'm going down the emotional route. So a lot of traders end up trading based on emotions. So for example, some traders might get angry at times and then revenge trade, or they trade through fear or not trading through fear. Fear covers so many things. So be very careful. Are you trading based on emotions? And that comes back to something you were saying earlier on about just jumping into the market, FOMO, all those sort of things. So coming back to trading with a plan, if you're trading through FOMO or through emotions, through anger, that is the route to the dark side. And so you have to be very careful. If you do, there's nothing wrong with getting emotional. We are human beings after all, but recognize that and self-evaluate so that you can say, okay, I'm getting a bit emotional here. I need to take a step back. And so having that self-evaluation can really help with, obviously we cover lots of tips and tricks on how to manage emotions, but one of the quickest things to do is to say, right, I need an arresting mechanism here. When I recognize that I've got angry or fearful, whatever, an emotion, then I need to take a step back for a bit. The market isn't going anywhere, and that's the biggest thing to always remind people. Good point. It's not going anywhere. When that market's flown off, don't worry. There'll be another setup. There'll be another trade that will come along. And so, but if you trade out of emotions, then that's the danger zone.
Love that. I don't know if that's 10, but I think that's a good point too.
Yeah,
we'll say it's 10. Yeah. So that was great. Hope everyone found that useful. So we got a question here. And the question, quite simple, quite straight up: should I trade full time? Now, for me, hearing that is, that if you're putting that on us, should you or shouldn't you? Yes or no? We can't really answer that. If that question came to me, I would be asking a series of questions back, saying, well, how much experience have you got? What is your current track record? What is the size of your trading account? How much are you looking to make? Are you looking to get yourself an income, or are you looking to build capital and then take that capital out at a later date and use that? There's so many questions in there that it's difficult to answer it with a yes or a no. But there's certainly, I think, like I've said, different parameters that a trader should be considering before they go full time. And I'll kick it off with the main parameter is what I found when I've worked with other traders is very often the trader thinks it's time to go full time way before they're actually ready, because they've obviously got a want and desire to leave their job or change what they're doing. So a lot of the time, I think the trader should be able to take a step back, like we've been saying, and go, is this actually the right time? Am I fully equipped for this? Am I fully prepared for it?
As a trader that I've trained over the years, and he went full time, and it was a perfect sort of environment in a way that he'd been trading for several years, had become profitable as a trader, gone through all the trials and tribulations over his first few years, and the light bulb had gone on and he'd become a profitable trader, swing trading on the side from work. Then he was made redundant from work. And so it was sort of the right environment in that he had a cash lump sum as well to then trade, to then say, okay, well, I've been forced down this route almost. His wife works. So that's a good thing. I think the one thing we would both agree on, someone wants to go full-time trading, make sure you've got a second source of income. Take the pressure off. Whether it's your partner works, or maybe you've got other investment income or a side business, whatever it is, take the pressure off. Because one thing that that he found when he went full-time trading, although he'd actually been successful for 2 or 3 years prior to going full-time, was all of a sudden that pressure, he felt it. And so because all of a sudden, every month, performance became important. And whereas it wasn't before. And because it wasn't before, he traded freely and was trading well. And so he still ended up doing all right actually in his first year, but he really felt it. And he had some dark periods during that first year. Or all of a sudden he felt like a beginner again in many regards, not because of his technical nous, but because of the emotions and the pressure of having to deliver and having to take an income. So it's a massive step. Do not underestimate the step, the transition, even if you're a successful part-time trader, to going full-time when the pressure's on. And the less pressure you put on yourself as far as having other incomes coming in, then, and that you don't have to take money out of your trading account at the end of each month, then the better you'll be.
Yeah, I worked with a guy, and he very much was so keen to go full time that he was only looking at the upsides.
Yeah.
He was only looking at, I'll be able to be at home, I'll be able to go and pick the kids up from school, and he was only looking at the upsides. I remember saying to him, don't underestimate how potentially lonely you will feel sat there all day. You've gone from working in a team of people that you work with in a close-knit environment day after day. He was an air conditioning fitter. And he said, oh yeah, but I'll have all this freedom and everything else. And within about a month, he said, yeah, I'm actually missing some of the human interaction. He actually went back and started working again on a Friday and a Monday. So, because what he found is most of his trading activity was between Tuesday and Thursday, and he was finding himself getting bored. So, and then he started finding himself wanting to make decisions and take trades that he normally wouldn't. So it was actually for him, he found a happy medium between doing part-time work and actually trading alongside it, and it worked for him.
And I think also then you've got to look at, because people say, well, how much do I need to have in order to trade full time? And I think you hinted at this earlier by saying, look, if you're going to take that initial step, it'd be good to have cash in the bank as well, not just so that you ease the transition as much as possible into full-time trading as far as taking money out of your trading account and stuff. So if you've got 6 to 12 months, that would be as a minimum of cash in the bank to just pay yourself a salary. So you don't have to take money out of your trading account. And then, well, what about how much? And this is where, people say, well, I want to go full-time trading, and they've got 20 grand in their trading account. And you say, well, how much do you need a year to live on? Oh, probably 40,000. Okay, so you want to make 200% a year every year.
Oh, but I'm home now. I can trade more. It's all these things come up, and it's like, no, it doesn't work that way.
No. So be realistic with the potential of what you can make. So, and you said this earlier on. What's your backtrack? What's your track record? What have you been making? And then just do the maths based on that sort of roughly. So if you've been making X, I don't know, whatever it might be, let's say over the last 3 years, you've been making 30% a year on average, whatever. And so how much do you need then? You can do the maths. Well, in order to be full-time trader, but taking into consideration everything else, yes, I want to grow the account as well as take money out, because you've got to add all that, factor all these things in. Actually, it's quite a large account. It's a lot more than people think. Yeah. So only the person, do the maths based on 30%, let's say, but also do the maths based on, you still want to keep growing the account as well. So you don't want to take it all out. So work all the numbers out, and you'll probably find you need quite a lot in your trading account.
Usually more than you think.
Yeah.
Good answers. And on that note,
yes, his name's Ali Crooks.
His name's Charlie Burton.
Trade safely out there.